Imagine this. The world is undergoing a massive technological revolution, and artificial intelligence is at the forefront of it all. From transforming businesses to revolutionizing how we interact with technology, AI is not just the future, it's the present. Now what if I told you there are 3 companies with explosive growth potential poised to dominate this space? What would be your next move? These companies are not just riding the AI wave, they're the ones creating it. We're talking about a leader in cutting-edge semiconductor technology, a pioneer in AI-powered web browsing, and a powerhouse reshaping digital infrastructure with AI-driven computing. If you only watch one video today, make sure you watch this one all the way till the end. You don't want to miss out on these potential game changers. Before we dive in, do me a favor, hit that like button. Let's get this video to 1,000 likes. Share this video with anyone serious about investing in the future, leave a comment with your thoughts, and don't forget to subscribe so you don't miss the next big financial investing update. Now let's jump right in. AI has already created massive wealth for investors, but the most exciting part? We're still in the early innings. A report from Bloomberg Intelligence suggests that generative AI alone could grow into a $1.3 trillion business in the next 10 years. That's a 42% compound annual growth rate. This means huge potential for companies leading the charge in AI innovation. Let's break down 3 AI stocks with the potential to deliver incredible returns. Now, before we dive in deeper into today's list, I want to let you in on a little secret that could completely transform how you invest and grow your wealth. This video is sponsored by Forecaster Terminal, a tool I've been using to uncover these incredible stocks, and honestly, it's been a game changer for my research. This software, powered by the Forecaster AI agent, uses cutting-edge artificial intelligence to analyze all financial instruments, whether it's stocks, ETFs, cryptos, indexes, forex, and even commodities. It's like having your own expert financial analyst working around the clock to give you the most accurate insights and uncover new opportunities. With Forecaster, I can quickly identify value stocks, growth stocks that are ready to break out, and even spot seasonal trends in the market that most investors overlook. I can spot insider transactions in seconds. It also lets me compare companies side by side with their competitors, giving me a full stock analysis instantly. Things that used to take me hours or even days are now done in a matter of seconds thanks to the Forecaster AI agent. One of my favorite features is the insider transactions tool. Imagine knowing when CEOs and executives are buying or dumping shares in their own companies. That's a strong signal about what they believe is coming next. The political tool tells you when politicians are buying or selling shares in a company. And with the overbought, oversold indicator, you can tell if a stock is near its peak or bottom, helping you make better timing decisions. And the best part? All these powerful features, once reserved for the elite investors and market gurus, are now at your fingertips thanks to Forecaster. If you're serious about investing, this is the tool that can completely transform your portfolio. It's designed to help you find opportunities, reduce risks, and make smarter decisions that could grow your wealth faster than you thought possible. So, if you're ready to take your investing game to the next level, click the link in the description now to try Forecaster Terminal for free, and use my code Galore10 to get a 10% discount when you sign up. Don't miss out on this game changer for your portfolio. First on our list is Riot Platforms, ticker symbol Riot. Most people know Riot as a Bitcoin mining company, but here's what makes it truly special. AI demands massive amounts of computing power, and Riot already has an advanced infrastructure built for high-performance computing. With the Bitcoin halving reducing mining rewards, Riot has pivoted into leveraging its resources to serve the AI sector. The company has also begun supplying excess power to the electrical grid, generating additional revenue streams. And here's the kicker. Riot is currently pursuing the acquisition of Bitfarms to expand its infrastructure and achieve greater economies of scale. If this deal goes through, Riot could position itself as a dominant player in AI-driven high-performance computing. Financially, Riot Platforms is in a solid position, with a market cap of $4.22 billion, earnings per share at 30 cents, and a PE ratio of 40.90. The company is trading at a valuation significantly lower than many other AI-focused tech stocks. In 2023, Riot generated $280.68 million in revenue, though it posted a net income loss of $49.47 million. However, analysts remain bullish, forecasting an average target price of $18.14 per share, an upside potential of over 93% from current levels. All analysts covering the stock recommend it as a buy, making it one of the most exciting AI growth stocks in today's market. Riot Blockchain operates in a dynamic and evolving sector characterized by high volatility. Although the company maintains low leverage with a strong Altman Z-score and exhibits low risk concerning earnings manipulation, challenges remain regarding profitability and efficient utilization of equity. The intrinsic value is near its market price, suggesting that the stock is fairly valued from a fundamental perspective. However, the lack of diversification in revenue sources and a narrow competitive advantage as reflected in a modest moat rating warrants caution. The efficiency rating remains steady without significant recent improvements, and no active buyback policy adds further to the cautious outlook. A formal evaluation of the financial solidity and competitive positioning indicates that while the company is structurally solid, the operational challenges in a competitive, volatile market require careful monitoring for future profitability improvements. Next up, let's talk about OPRA, ticker symbol OPRA. While Google Chrome may dominate the browser market, OPRA is carving out a unique niche by integrating AI directly into its platform. Earlier this year, OPRA made a bold move, investing over $20 million to build an AI computing cluster in Iceland, powered entirely by renewable energy. This makes it the first and currently only browser with on-device AI capabilities. And the results? A 24% increase in average revenue per user since implementing its AI strategy. That's a massive jump in monetization potential. OPRA's financials paint an interesting picture, with a market cap of $1.93 billion, earnings per share of $1.01, and a P/E ratio of 21.64. The stock is significantly undervalued. The company posted $396.75 million in revenue in 2023, with an impressive net income of $153.30 million. Perhaps even more intriguing for investors, OPRA offers a rare 5.40% dividend yield in the tech sector. Analysts have overwhelmingly positive ratings, with price targets suggesting more than 60% upside. Analyses based on discounted cash flow models and relative valuation measures indicate that OPRA Limited's intrinsic value is sensitive to growth forecasts, margin expansion, and capital efficiency. Preliminary evaluations suggest that if the company meets its growth targets and improves operational efficiency, the current market price could reflect an undervaluation scenario. However, pronounced volatility in earnings and market sentiment requires a cautious interpretation. Based on this intrinsic valuation perspective, the stock appears to be moderately undervalued if long-term strategic initiatives convert into tangible improvements in profitability and cash flow generation. Revenue streams are diversified across various digital segments, decreasing dependency on any single product line. This diversification strategy helps mitigate risks associated with shifts in consumer behavior. OPRA Limited's operations extend across multiple regions including Europe, Asia, and North America. This geographical spread aids in balancing region-specific economic cycles and regulatory environments, although the degree of diversification varies based on market penetration and regional digital adoption rates. OPRA Limited competes with major players in the web browser market, including Google Chrome, Mozilla Firefox, and Microsoft Edge. These competitors significantly outscale OPRA in terms of market share and technology investment. OPRA Limited presents a nuanced investment profile characterized by evolving digital initiatives, modest profitability, and a carefully managed risk profile. A moderate undervaluation potential exists contingent on continued improvements in operating efficiencies and strategic execution of growth initiatives. The company's solidity metrics and earnings quality suggest a stable, though cautious, financial structure. Competitive advantages remain modest, impacted by strong market competition. The overall assessment is that OPRA Limited demonstrates steady performance with potential for improvement, recommending careful consideration by investors aligned with moderate growth and risk-adaptive strategies. The company continues to innovate, with new AI features, digital advertising advancements, and even gaming integrations. This stock has serious long-term potential for investors looking for an AI play outside the usual chip makers and software giants. Before we get into the last stock, let me ask you something. Do you want to know my secret for finding winning stocks? It's Forecaster, the ultimate tool for uncovering high-value investments. Try it for free today. Just click the link in the description with my code, Galore10, for an exclusive 10% discount. Now, let's talk about one of the most established companies making waves in AI, Intel, ticker symbol INTC. Over the past few years, Intel has faced intense competition, losing market share to AMD and Nvidia. But here's what many investors don't realize. Intel is making a major comeback. After 3 consecutive quarters of rising server CPU market share, Intel now holds 64% of the market, compared to AMD's 33%. And with the launch of its new Xeon 6 processors designed specifically for AI workloads, Intel is back in the fight for AI dominance. Financially, Intel remains a powerhouse. With a market cap of $102.19 billion, earnings per share of negative $4.38, and a PE ratio of negative 5.39. The company reported $53.15 billion in revenue for 2024, with a net income of negative $18.76 billion, and a dividend yield of 1.06%. While Intel's stock has faced challenges, analysts are starting to recognize its turnaround potential. With a renewed focus on AI chips, data centers, and high-performance computing, Intel is positioning itself for long-term growth in the AI boom. Analysis of insider trading patterns indicates that key personnel, managers and directors, have executed buy-side transactions, aligning their interests with those of long-term shareholders. Evidence suggests that a portion of investment funds and institutional investors, which may include individuals with access to privileged information, have increased their exposure to Intel. Such activities can be interpreted as a vote of confidence in the company's strategic path and future prospects. A comprehensive analysis of Intel Corporation reveals a company operating in a competitive yet diversified semiconductor market with robust financial health. Notable strengths include solid turnover and earnings trends, commendable profit margins and ROE, and a balanced capital structure. Fundamental analyses point to an intrinsic value near the current market price with the possibility of slight undervaluation. Strong indicators reflecting financial solidity and reliable earnings quality further underscore the company's stability. With an active buyback policy supporting shareholder returns and a competitive advantage rating of 7/10 based on multiple key parameters, Intel exhibits a robust efficiency profile with sound diversification in both product portfolio and geographical reach. Recent insider and institutional buying reinforced the long-term bullish perspective on Intel's strategic positioning within its core markets. So, let's recap. Riot Platforms is leveraging its powerful computing infrastructure for AI, OPRA is redefining web browsing with AI integration, and Intel is making a strong comeback in the AI chip market. Each of these companies presents a unique growth opportunity, and with AI projected to be a multi-trillion-dollar industry, the time to invest is now. Intel's revenue is derived from multiple business segments including client computing, data centers, IoT, and emerging technologies. This diversification helps mitigate risks associated with market-specific downturns. The company enjoys substantial revenue generation not just from the United States, but also from markets across Europe and Asia. This geographical spread provides resilience against regional economic cycles and regulatory variations. So there you have it, 3 AI stocks with explosive growth potential to buy now. If you want to take your investing to the next level, Forecaster is the tool I trust to find incredible stocks like these. Don't wait, try it for free today. Use the link in the description and code Galore10 to get started. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Which of these AI stocks do you think has the most upside? Let me know in the comments below. And don't forget to give this video a thumbs up, share it with your friends, and subscribe to the channel for more stock market insights and amazing investment opportunities.